Hey, what's going on, guys? This is Terrence Ray, and I'm back at you with a weekly stock market update where I go over setups for the upcoming week. Um, without any further ado, let's get right to it. Now, for the past couple weeks, we've been trading in a range for the most part, kind of like a slow melt up. That's generally what happens during the summertime. Um, where you have the volume and trading going down, people taking vacations, things of that nature. So it's just kind of been like a slow drift up. So we can see right here on the SPX, which represents the option market for the S&P 500. You can see it just drifting up, drifting up, drifting up, drifting up, going higher, and it passed to finish out the week. You can see here we go on the second, then the third, and then the fifth. We had that pause in the middle of the week for the fourth. And you can see we steady going higher. Now the expected move for the week is, according to the option market, um, is $54.38, which is not a lot. Um, if I had to gauge if you asked me what would be considered a lot, I would say right around 90 to 100, even maybe in the 80 range compared to what we've had. So if we're right around 50, then that lets you know that the option market is not pricing in any large movements this week as a whole. So we could just see the market go a little higher or drift somewhere within here in this range right here. With this being the highs right up around, we'll call it 56.21, and right around here at the lows, we'll call it what a 55.13. And all I'm doing, to be honest with you, is coming right here where on the TastyTrade platform. If you come to the option chain, you see this ruler right here where they have the expected move, that they have a certain way that they calculate it. The way they do it is a little bit different from some other platforms, and I tend to find that theirs is more accurate, to be honest. Now, I got some stocks that I want to look at that I've already pre-pegged that that gonna have some that I think are worth looking at this week. So let's take a look at the first one I have is AMD. Want to look at AMD. Now AMD, I have some notes, and the reason why I have notes on AMD because it's a potential breakout. Now if we look at AMD, this is a daily chart, and and this is a year. This covers a year. So you can see right here when we started this up move, right? And then it almost looks like a a house or something like that. If you're looking at right here, or a chapel or something, right? Coming up with a new pattern, and you got this little top right here, and you can see it came down. Now, generally, this would be the main move, right? The big move. And sometimes what'll happen, some traders like to see it retrace anywhere between 38% and 61% of the main move. Now, if I was to take this Fibonacci retracement, and let's say I just came down here to the low and went up to the high, and we pegged it like that, right? Like so. Where are we at? You see right down here at this 61.8 right here. Came right here, made a wick, and then turned and made a shoulder, a head, and then a shoulder, head and shoulders right here. A reversal pattern right here. We're at the middle of the retracement. And so with that being said, now you can see right here as it ended on Friday, we had a big green candlestick right here. And this would be resistance. Now, if we can get a break right here, then we may be able to get a move higher, right? You got a gap right here that at some point, not saying it'll be next week, but at some point this gap will be filled. I believe anyway, right? So you got a gap right here, and you even have one right here. With AMD making you can see right here, well, we got this wick, this hammer candlestick right here, pushing the market up. starting a move going up to turn back bullish. So let's see what happens right here. We break out, take out this high right here. Let's call that 175, excuse me, 174.55. Right now it's at 171.90. Now, ideally, to be honest with you, I would have rather been in back here. This would be ideal, right? So you would like to see a break here and then maybe see if it hits some resistance up here right around maybe starting around 185. And then maybe you could put your stop, I don't know, maybe below the gap right here or below this candlestick. So if you want to risk, I don't know, maybe about $10 to make about, I don't know, about 10 or 15, 14, 15 bucks. It just depends on, how aggressive you want to be. If you want to, if you think it's going to come up here and take out, hit this gap and then go higher, I would say as long as the market is doing what it's doing, continuing to drift higher, I expect some of these stocks that have bullish patterns to continue to go higher. I want to take a look at Tesla. Now, I took a little break. I didn't do a weekly video last week. But if you have been following the channel, why that look like that? You will see that don't look like Tesla. What I got? I put put it in backwards. TSLA. There we go. I was wondering. Now, if you remember, I had this triangle. This triangle I had on here like for the past 2, 3 weeks, like watching it trade within this range. And you can see we got a breakout here, came back, retested the triangle, and then went higher. That's what you want to see. We will want to see something like that in AMD, something similar to that. There are different ways. I'm gonna go back to that chart after this. And you can see that you got this big green candlestick here. And then at that point, you just got to start looking for resistance or, you know, where you think it's going to go. I use Fibonacci sometimes to try to figure that out. Um, you can see it's at a point right here. Now, right here, it's an art to it. There's no science to this. Ideally, at first I had it here. And if you play in that game, like from this low to here to back into this area, it already took out the 1618. So it could run higher, right? At some point though, the stock is going to have to pull back. Now, this is where getting using options to go along with your stocks. Now, if you're just in it for the long haul and you're like, hey, I'm just bullish Tesla, then you don't worry about it. You just hold your long positions um until whatever your target is, right? You got a gap way up here between what is that? We'll call it 290 and 270, 280. So it could run all the way up to there before it hits some type of resistance. Now it is already overbought on the RSI and my stochastic. So one of the things is if you think that it's going to continue to go up, a couple ways you can play it. Well, the main way I would play it is if you want to hold on to your long shares and not let them go, right? Because you don't want to give up on it. You think it's more upside. You can sell calls against your long shares, right? Come out 41 days, which is where I would go if I was implementing that type of strategy. And I'd probably come out to about the 30 delta and sell that call at the end of the expected move. Take in about close to a grand in premium, about 985 in premium. Uh, you take in that and then you let it run. And as the stock goes up, just depending on what happens with the IV, um, you ideally what you would want to do is be able to, if the market was to pull back or go sideways, maybe pull maybe $400 or $500 out of the call that you're selling against your long shares. That's a way to stay long because a covered call is a bullish strategy. You already own the shares, right? You're just selling the calls because hey, we may get a pullback a little bit. You may be able to pull 100, 200 off of a 1-day move, just depending on how many cars you sell. It goes up here and pulls back and retest this level right around 230, 235, 230. Just that pullback alone could make that call that you sold and took in that premium for, about 900 to $1,000. It pulled back. It could decrease by 100, 200 bucks. You might be in it for 1 day, peel that 200 off, resell the call, trying to stay. Me, I like to sell when I'm selling calls. I like to be at the end of the expected move, or maybe slightly outside, depending on how the stock is moving. But right around that 30 delta. Um, and if you have, let's say you have 100 shares, if you own 100 shares and then you sell a call that's 30 delta, you're still long 70 delta, right? So, each share of stock will represent one delta. So all you're doing, yes, you're capping your upside, but you're also increasing your probability of profit. And you're changing the dynamics of, instead of just needing the stock to continue to go up, while you want to stay long, you can make money and the stock goes sideways. The IV rank is juicy. It's a lot of implied volatility in here, a lot of premium in these options. So if it decreases a little bit, then you can make a little money on the call side as well. I want to go back to AMD, then I'm gonna go to another stock that I have on here, because I want to same thing. Let's take off the indicators. I just want to hide these. It's asking me, do I want to remove it? I don't want to just remove. Let's hide them. There you go. Now, same way. So it breaks out of this range. If I drew a trend line from here, right across here, this flat level, you would like to see it break higher, pull back, give you something like a bull flag, and then take off. When I say a bull flag, all I mean is like something like this: up, pull back, higher. Or here's one right here where you get like two or three candlesticks to fall down, and then the stock takes off to the upside again. Right. That's what you want to see. Something like, and I'm gonna go back to Tesla again, just like this. It gapped up, came back, retest right here. If I was to continue to extend this trend line out, it would come right below these candlesticks, hit here, then took off. It retested that level and then took off. So that's something that similar. You can trade it that way with AMD, or sometimes some people like to get in like right now before the breakout, but it may not do it. So that's just one of those things. But when you get that retest and you get in on a retest, because then at that point, if you get in back here, then your stop is going to be below the actual pattern. So on AMD, so if it broke out of here, retested this area, then your stop would be somewhere back here. And then at that point, you want to see it run. You got to take profit up here to make it worth it. Next stock, now I hadn't looked at Bitcoin in a while. Let's take a look at Bitcoin. Bitcoin is at some good, at a nice support level. If I can get, all right. See this little level right here where you had this pattern? Look where I'm gonna put a rectangle on it. We'll go all the way across right here. Where we at? It's a nice support level right here. This is where we have some congestion. Now it's right here. I like to see it pull back a little bit more, right around 52,000, and that wouldn't be a bad level uh, to possibly get long again on Bitcoin. Let's look at the weekly. We look at it on a weekly chart. Now, if you're looking at it on a weekly, the support level would be right here, right around 46,000. But the thing with Bitcoin, it may not, so you can, maybe buy a little bit, then buy a little bit if it goes lower, because it may not even get back down to this level, right? Because right now, as I'm doing this video, Bitcoin is up 3%. Because Bitcoin just continuously trades. But this is this is a nice zone for the daily. Right down here, right around anywhere between 52,000 and 50 is a nice area of support. Let's go take a look at SMCI. SMCI. The reason why I had this on here, super microcomputer, is because of the pattern. Now it's in a range, and it's easy to see this range right here, right? This is a nice triangle, and you could do something like so, bam. Then we'll draw another trend line underneath it right here. This is just like this, something like this. You just got to be patient and sit and wait and watch, right? You got your big move here, and now it's just trading in a range. Now, if you go back and you look at if you rewind the video, look at the Tesla triangle. It was a smaller triangle, but you seen the large move that came from it. It's kind of like I talk about this, but kind of like coiling up a spring. When you take a spring and compress that spring, push it together, and then let it go. Same thing with a chart, with a stock, or it could be forex, it could be futures, it could be whatever. The longer this stays coiled up, when it does make a move, and it can make it either way, right? It doesn't necessarily have to be to the upside. I would bet. I am a betting man. I would bet that it would be to the upside in this particular stock. Now, what we want to see to make this move, just kind of, put it on your watch list and just watch it. You want to see it break out of here. We want to see a bull flag, a up, pull back, and then boom. That's what we want to see coming up out of here. We want to see it break. We want to see a break out of here, pull back to retest, and then take off higher. And then you're gonna get a real nice move. It's gonna be uh, a nice. It should be a profitable trade. Should make a lot of money on that. It is a large stock though. So right now currently it's $846. The highs that it's off of though was like 1225. So that's about $400 almost that it's off of its high. Next, I want to take a look at Palantir, and I wrote take profit like so. Palantir. Palantir is one of the ones where, yeah, I see why I got this on here. Wouldn't be a bad idea to come on out of like if it was me, if I was in Palantir, I'd either be taking profit or I'd be selling calls against my existing because it's getting ready to take out this all-time high. And generally when stocks get up around that level, you could see some type of, well, no, I stand corrected. This isn't the all-time high. All-time high is going to be back here somewhere. Let's go 5 years. Zoom out. All-time highs is $45. So now it's getting ready. So now I stand corrected. That's why it's good sometimes to zoom out. Now with me zooming out, changing my whole analysis, does not mean that I still would sell calls against if I had shares here. I still would sell calls. I would still be doing a cover call. It's a high probability trade. Selling calls against the existing shares. I would definitely come out here maybe around this 31 delta right here, or either this 26, sell this expected move right here at 31. I would do something like that. And because you're not gonna hold it, you just need it, you just want to see it slow down and pull back a little bit, close out the call, hold your shares, and then it go higher, reapply the cover call. And you can see we got a gap right here, right up around 31.89. So we'll call it 32. So Palantir, one of the ways that you can find a target for it is like when you see something like look like it may be channeling, we'll draw a trend line from here to here, right? And then extend it. And you say, well, so now what you do, I went to I actually went to a trading like a investment convention or something like that. And then I sat in on this class. I think the trader's name, I want to say his name was Harry Boxer. If you Google him, look him up. He he does he got some books out on trading stuff like that. And this was one of the ways, and I'll never forget because I took some notes, and he was like, he'll draw a trend line, and then when the price action hits that trend line to the upside, then that's where he'll start looking to take profit. So like meaning like as this stock goes up, where would it hit on this trend? Let's say Monday it came out, went here, then maybe Tuesday, maybe Wednesday, put it somewhere right around 32 bucks before it slows down. So this is one of the ways that now these are weekly candlesticks. So this is a weekly candlestick. So it may take a while to get up here if you're judging it like that. But that's one of the ways. Let's go back to the daily. All right. I don't know why it looked like that. Let's see. Let's zoom out. Let's go 3 years on the daily because it won't let me. That's why I went to the weekly in the first place. Let's go back to the weekly. Just trying to make sure I get everything, the whole view of the stock. Is that it? Yep. Oh, let's see. Let's mess with the. Got it. Letting it out. Messing around. There we go. Right. So I came on the weekly to draw this, and you can see just so I could get the trend line from this high to this high, and then you could take profit once it gets up around that area. But I still would be selling calls no matter what. Once something gets overbought for me, then I start selling calls. If I own the shares and don't want to get rid of the shares, I'll do that. It's almost like a way of creating like your own little dividend. Also, I wanted to do some Elliott wave analysis. And I wanted to do some Elliott wave analysis on the real estate market. So we got XLRE, which is a sector ETF, and this is the real estate sector ETF. Let's go to the daily. Let's see, it's already a pattern that has presented itself here. Now, one of the ways that how I like to count my waves, or how I learned how to count waves, and how I do my fibs and all of that, is when you look down here, here is a bull flag, right? I'm going to stretch this out. Then we're going to come all the way over here. This is what I be talking about. So you got your hammer candlestick right here. See, he even had one right here. A lot of times when we see those candlesticks, those long wicks, it's going to signal a change in market direction. When it pulled up, took out this high, made a higher high, and then pulled back and then gapped up, that started to move. So this would have been 1, 2, 3. Now, the fourth wave is where you generally get your patterns. You generally get like your triangles, your channels, your pennants, flags. You get those a lot of times in the fourth wave. And you can see right here, or excuse me, your flags you can get in the second wave. Like this would have been in the 2, and I would have considered this as a flag pattern. This right here, the thing about the fourth wave, you don't know how long it's going to last. So if it seems like, without me knowing anything about what's going on in real estate, I can kind of see that we hadn't deteriorated and it hadn't got worse or better. Like we've been kind of interest rates been high, they got high, and then they're kind of just sitting in a range, right? Um, I know I've heard some talk maybe about uh, one of the things that the president may try to do to boost his, to try to get his polling up is, leaking that he may cut interest rates or which he doesn't cut the interest rates. Maybe he's going to try to lean on the Fed chair or something like that or try to get them to do it. But either way, you can see the by the sideways action of the actual chart of real estate, I can tell that not a whole lot is going on. You could just look at it, and you can do that with different ETFs that have certain stocks about the in it that represents the economy. You can look at it, and you can tell without even knowing the news. And with it being in this fourth wave, now let's say I make a prediction and I try to keep up with it and show this chart on a regular basis. If we get a nice breakout here and it starts to go up, we'll see some motion in the real estate market. This ETF begins to go up, maybe people will start buying. Maybe it could signal that rates were cut and people maybe out here buying more homes. Something will happen. When you see this break, either to the upside or to the downside with any type of velocity, something similar to this in either direction, it will correspond with some type of news in the real estate market. And you can see I'll be able to see it on the chart. And that's one of the things uh, that I like to use Elliott Wave for, especially to make money and to make certain trades. But when I see something like this, when you understand um, like option trading, if you know that you're in a fourth wave, or you even think you're in a fourth wave, you don't have to be directional. You can come in here, man, and not in this particular stock though. This isn't a good one to do a strangle in. But if you had a chart that looked like this and you were able to, let's look at the XHB, the home builders ETF, you might be able to get. So you can come in here and sell strangles. You can come in here, even though it's not too liquid. You got to know what you're doing in here because the market's not real good markets. But basically, when you have a chart that looks like this, that's in a range, these are the type of markets where you want to come, like in the IWM. I could pull up the IWM. Look at this. It's been in this range from here to here for like the past since December. Just about every iron condor or strangle that was placed in here made money. It should have. I can't see how any strangle lost money from December 27th. As long as you were staying outside of the expected move, long as you were out here, which is what which is where I do iron condors or anything like that. You out here, you made money, hand over fist. All of them should have made money because the market stayed within the range. Stayed within the range. And so that's one of the things. No, understanding where you are in the wave count can also help you decide what type of trade or what type of option trade to put on. Now, if you're just buying stock and shorting stock, that's not going to help you at all. So but that's one of the things about option trading, giving you more options, and no pun intended. So hey guys, with that being said, I know this video was a little longer because I didn't give you one last week. So I went over some stuff, went over some stocks that I like. I like AMD going forward. I like them all. You just gotta figure out what strategy you're gonna use to trade them. Bitcoin coming down to a support level, Tesla reaching the overbought zone, but I still think it got room to go higher. But I think that this week we should see a little chop. It got to slow down at some point before it take off again. And I don't expect a whole lot of movement in the market overall. This is one of the best markets, in my opinion, to just to own the S&P 500 and just collect some dividends and let it drift higher. I do see a large move in gold. Maybe I'll talk about gold on Monday. I'll come back with another video for gold. Hey guys, with that, hit that like button, hit the subscribe button, share the video, please. And I'm out. Peace.